Good morning, everyone. It's 9:12. Everyone has survived 9/11, and once again, today is the 12th. We are going in trading options expiration next week, but we're going to take a look at Dow Transportations here. And what is the most powerful thing about the transports, which is a leader that the economy does well when people are shipping by plane, by truck, by ship, and by ground, which means railways. So basically what we're showing here to begin the tape with SMF Street Traders is a 4-month topping pattern. We've had a double bottom. We had a nice correction off of the 2010 high. We've come down. We set in a double bottom pricing control mechanism, which was over here at half of your SMF monthly bar. We've come back up on a 4-month topping level on a monthly chart. The MACD reading, which for regular people that use standard technical analysis, is what the standard public really make their decisions on. You, on the other hand, at SMF, make decisions at price control action, because it's all about the price control. So we have not taken out the top. There's half of that monthly bar right there. By understanding that SMF many months ago, what GDP was up around 3.5%, the stimuluses had worked well, and the transports took off the bottom like they should, and the rest of the market follows the rally as they should. And basically on this percent DS, which is also referred to as percent K, we are diminishing in mathematical value at 7.32, which is another primary reason why you can't go above that 4-month price action resistance. Half of that bar is the SMF Pro Trader monthly bar and price action. Half of this bar over here, where that last 3-month trend of 010 had found support. So one of two things are going to happen. We're going into the October 4th earnings kickoff. That's the Q4 earnings. When the shippers or the rails or FedEx and people like UPS come out, and various different companies that are shipping products of goods and services from productivity, if they say they're missing the earnings, this index, once again, the transports will lead it down. That's the monthly chart, which is what you're looking at. That's the bearish part of the chart. The bullishness is that you had this long 10-month rising moving average that go along with nice trends. That's all good and well. Now, one of the things that we have seen that's a very alarming on the chart, and our mathematical equation is that this blue line is called a 40-month moving average, which has crossed over the 10-month. And even though that the 10-month is rising, the relevancy in trend of momentum weakens at the top because of these crossovers, meaning that any up move, if I'm declining and crossing over in severe on monthly moving averages, well, there's a problem there. So I'm going to draw a trend line right here. When the Dow transports fail below half of this monthly bar and that monthly bar, we will break that bottom low. And with the earnings season coming up, we said that the July earnings seasons troughed in July before the July earnings seasons even started, and that we would sell short the beginning of the earnings season on anything that gapped up and would go down, and we were 100% correct and accurate, and we have all the live trading videos to prove it for those who disagree. The other thing is that the actual results speak for themselves. Now, when we look at a weekly chart on the transports, we're seeing a very long at 44.96 over here. 1 week, this is back over in 5.9. This week here was 5.16. This topping pattern here was 6.13. That pattern there was on 6.20. And then this is where we made that double week price action down here. And you can see on a weekly that we're still having the very same problem. Now, we have not gone into a bearish weekly sell signal as of to date. But that's as of right now. The key focus on the Dow transports is as follows. Is what is the sustainability? On the weekly, you've got more of a bullish picture than a bearish picture when it comes to the weekly moving averages. The only thing that's bullish about a weekly moving average is that during the light August month, and this is only or September, we came off, we were selling short in August. How right we were. Everyone was bullish and we went down. We made money on it. The transports going down and selected stocks that would fall. Here's the thing. We got support at that 50-week moving average, but once again, you got a 20-week moving average, and here's what I want to point out, SMF Street. That red line is about, if it crosses over the 200-week, the green line, and crosses over the 10-week, that means that we will be shorting the farm at any pop or any move up, because that trend momentum is very weak. They don't both go together. You can't have a declining 20-week over the 200-week and expect that you're going to consolidate and hold and make all the greatest highs in the world. There better be some earnings catalysts in Q4 for this index. That's the weekly chart. When you take a look at what the standard public looks at, here is another pattern to take a look at on a daily. Considered a 1, 2, 3, 4 day topping pattern at resistance. This is daily moving averages. They're quite different and have a different meaning than the weekly and monthly. But you can see the 1, 2, 3, 4, 5, 6, 7 day topping pattern here. That's at a higher price. This is at a lower price, and we're seeing that happening there. The bullish part of it is when we corrected over here, as we said we would, we went into a daily sell signal, which we look at these buying sell signals as how the public makes their decisions versus you are making your decisions based purely on price action between the buyer and the seller. And right now, this whole move off of these bottoms off your daily chart, which consolidated down here, are very, very low anemic volume. Meaning that all it takes is when the crowd comes back in September, but particularly, let's think about the October earnings season again. If the sellers move in just one day, you can come all the way right back down here on the daily at half of that SMF daily bar. That's at 41.95 on the index. So what we're going to do is we're going to be looking at the key Pacific areas that this is the transports right here and the companies that play their role in this particular index. Now, SMF Street, as I've always said, the index goes up when these are performing well. When the index goes down, it means that the broader leadership within the transports are going to be weak. So in the upcoming Q4 October earnings season of 2010, we're going to be looking at the UPS here. We're going to be looking at the FedEx. We're going to be looking at the JB Hunt Trucking. We're going to be looking at some of the airlines in here. And we even have Expedia in here. So basically, we've got some of the airlines in here. And let me just tell you one thing. When the sellers come back, all it takes is a couple of days selling, and you can end up right back here. That's the daily chart. I'm going to conclude the Dow Transports. We're going to take a look at some of the leaderships for the options expiration in the Dow Transports, because when the big players come going in to a lower growth environment, lower growth is lower growth in the U.S. The pro and con is you can stimulate anything to get a rally, but will that rally be sustainable? No, it will not. They never have been.